Ben ritrovati, siamo sul floor del New York Stock Exchange, giovedì mattina, in questo momento indici in territorio positivo in quella che è la giornata più intensa di questa stagione di trimestrali. Siamo con un nuovo ospite, come vedete, che è Derek Orth, che è Designated Market Maker per Brandon E. Cryan and Company. Derek, thank you so much for being with us.
Pleasure being here.
So Derek, let's talk about this market. I was saying that we are up today for the fifth day for the S&P 500. It's the busiest day of this earnings season. The market keep climbing, even though in some cases we have seen revenues that have been quite disappointing.
Well, looking at the technicals this time of year is very important. Earnings season and these market-driven events that come out, we kind of have to know, what we're looking at and where we're going here. Right now, the Dow is trading at up about 61 points here in a 14.7 range. For any kind of pullback, I'm looking for maybe about 14.650 as a support level for first level pullback. Maybe 14.500 for a secondary level for a pullback if we have something in that in the making of that. But it's just basically when you're coming around this time of year, you want to have these lines in the sand where you want to anticipate some sort of disappointment in the market. What I'm seeing also over the last 5 trading days, what's been driving this rally over the last 5 trading days is the Philadelphia Semiconductor Index.
It's an index that you follow technically, and you have seen a long trend now, like still going up.
Yeah, so right now we're trading at the 440 level, and it's at an area where we were at the March highs. And if we do break through here, and we've been significantly rallying, I think that's what's been holding up this market trend for the last 5 trading days. It's been outperforming the market for the last 5 trading days. And if we break through this 440 level in the semiconductor index, the Philadelphia semis, we could see higher prices coming and more support. Also, I've been watching the transportation index, and that has been actually leading the market in its directions, in my opinion. Right now, it's around 6,100 and change. I'm looking for a support zone around 660. Ultimately, if we do have any major pullback, 5,900 is an area where it looks like we should have some major support for it. And considering where it's been and where the direction is still trending up to the upside here, it would be a good entry point for if for allocating some assets towards that sector.
And of course, as we know, you follow you follow the market, and you really study with your technical analysis the direction of the market. We have seen, and we have repeated this many times, that at the moment there is, we can say, a disconnect between the market and the rest of the economy. The fundamentals are not really justifying this movement, and within your expertise, your technical analysis. Where do you think this market can go? I mean, a lot of people are saying that this year the sell in May and go away will not apply.
Well, you never know what is going to transpire. Only time will tell. But when using technicals, you want to look again where your line in the sand is, where you want to say, all right, are we looking still constructive here on the upside? And if these levels hold and volume, you have light volume pullback to these levels, that's usually a good sign technically that we can keep going to the upside. And the fact that investors are underallocated, which is talked about a lot, people are not really believing what this market has done. That's surprised a lot of people. I think if the surprises keep coming, eventually that reality is going to set in, and they're going to have to start allocating some of their funds to an area where they can achieve those goals of their future of investing. And that's basically where I'm looking at.
So tomorrow we're going to have important numbers, important data, the GDP, the first numbers for the first quarter of this year. Numbers that a lot of people are saying if they disappoint, there will be another confirmation that Ben Bernanke will keep helping this market. So can we say that tomorrow it could be a very important day for the market? It could be a catalyst. The GDP could be a catalyst.
Every new day brings a new catalyst. You got it. That's how it is. And that is the next market-driven event that we're going to see. And again, see if those numbers that we draw in the sand here, see if they hold. If something comes out disappointing, if things are actually still looking in line, then you know what? If Ben Bernanke will be there providing help along the way, the trend should stay intact.
Thank you very much, Derek, for being with us.
Thank you very much.
E grazie a voi per l'attenzione e a domani.